What not to do before closing on a house? That's what I'm talking about today. Let's get started. Hey friends, Mary Howard here with There Is No Place Like Home NC, Red Boots Realty powered by eXp Realty, and today I'm talking all about the things that you should not do before you actually get closed on your home. Now this is after you've gotten pre-approved, you've gone under contract, you've gone through your due diligence period, and now you're just waiting for closing day. So here we go. 1. Do not spend money. Implement a self-imposed spending freeze. You've obviously got to buy groceries, gas for the car, but don't spend anything that you don't absolutely need. Keep things as stable as possible until after you close on your home. It's best to avoid any major purchases during this period. Your lender might have certain cash reserve requirements for the loan, so a major reduction in assets could hurt your chances of getting that final approval. Don't make late payments on your existing debt. The pre-approval letter is determined by a snapshot of your credit at that particular point in time. Any late payments that show up is going to be a huge red flag, causing them to turn down your loan. Don't open any new credit lines, such as credit cards, applying for a store credit card for furniture, or a brand new or new to you car. No. Do not close out any debt account. It's usually a good idea to do this. However, as I mentioned earlier, it's about keeping your debt as it is until the mortgage closes. Quick break here. Are you finding this video useful? If so, please consider hitting that subscribe button below, clicking the thumbs up button, and please leave any questions or comments below in that comment section. Do not agree to co-sign on a new loan. Previously, I mentioned that you should avoid any new debt, especially buying a car. This is true for all forms of debt. You becoming a co-signer makes you 100% responsible for the new loan. Regardless of your good intentions for your friend or relative, this is a huge no-no. Don't switch jobs before you're closing unless it's completely unavoidable. A new job usually comes with a new income. If your income goes down, it will alter your debt to income ratio in a very bad way. A change in employment will also require a lot of paperwork changes. Most lenders will verify your employment again just before closing day. And remember, they hate surprises. Do not spend the funds earmarked for your down payment or closing cost. The estimate provided to you for the closing is just an estimate. Things like property taxes and homeowners insurance, other costs can creep up and cost a little bit more than anticipated. It's an awful feeling to get a call from your lender saying, okay, you are clear to close and this is the money that you need to bring to the closing, just to realize that you don't have it. Do not ignore the request from your lender. Your lender is very important to this transaction and is a part of your team, trying to help you win the championship of home ownership. If your lender contacts you and asks you for some documentation, please be prompt and thorough in providing your answers. Your entire loan can hinge upon this one item, and you don't want to get rejected because you couldn't find the time to respond to your lender's inquiry. Thank you for watching this video. Click the link below to watch the next video. Don't forget to hit that icon bell to subscribe. This is Mary Howard with There Is No Place Like Home NC.